All right. Our first guest. Hey, Dejan.
Hey, how's it going?
Yeah, doing really
Can you
good.
hear me?
Yeah, I can hear you perfectly. Thanks for coming on.
Okay.
And we're just going to get started. If anyone wants to hop on video or mic and just introduce yourselves, you're welcome to.
My name is
Okay, I can start. Oh, you start. You were the first one. Faster.
Johnny from Nomad Cruise, and right now I'm in Amsterdam. And
Okay, I can be next. I'm Dan. I know you from Nomad Cruise, and I'm from Serbia, so that is really limiting for me. I don't know how to invest in foreign markets. So I'm not the EU, not US, not any of the developed countries. So mostly I'm worried about legal protection if something goes wrong.
Hi guys, I'll say hello. It's Leslie here. I am in Edinburgh in Scotland, and I guess my interest is more passive income, something going on in the background. This has to be the brightest, most colourful slide set I've seen in a long time. I'm looking forward to it.
Oh, good.
Especially considering we are doing investing talk, so it's like really.
Yeah, to be honest, I didn't spend too much time on the slides. I picked the first theme that looked like it would be decent. All right. So I'm going to go ahead and just get started. I'm sure some people will come in a few minutes, but.
Yes.
Okay.
Yeah.
Perfect. Awesome. So, hey everyone, my name is Johnny FD, if you don't know me, and I'm going to be doing kind of a short talk, but mainly a Q&A for all of you guys. If you don't know who I am, I have been on Nomad Cruise a bunch of times. I've been a digital nomad for many, many years. I'm the founder of the Nomad Summit. And a few years ago, I started co-hosting the Invest Like a Boss podcast, really just to learn for myself as well. And today's talk is really going to be about saving and investing, because a lot of people right now, especially during this downturn, have been asking questions about it. And since all of us have a lot of free time, I figured why not share some of this knowledge. So let's go ahead and just get started. So this is where I'm at right now in Sri Lanka. This is before the curfew lockdown started. Luckily, they still let us out every 3 or 4 days to go to the beach and go to restaurants and grocery stores. So it's been pretty nice, but most of the time we're indoors, staying at home. And today's talk is really going to be about two parts. The first part is going to be about savings, and the second part is going to be about investing. We have about 45 minutes or so, and we're probably going to have more people on the call. So let's try to limit our questions to a minute or less each, and then so we can try to get everyone in. To the next slide. So the most important thing when it comes to saving or even earning money is not how much money you make. And this has been, I've seen this twice in my life now. I'm not even that old, I'm 38, but I remember in 2005 to 2007, everybody I knew was spending so much money buying nice cars, fighting for the bill at restaurants, going to bars, and happily having $100 worth of drinks per night, buying fancy clothes, getting into big houses. And even then I knew like this could not last forever. And then again, for the last couple of years, I felt that again. Every time I go back to the US and we'll go to some random bar, I'll be shocked that no one ever asks for a menu. They just order whatever drinks they have. And then end of the night, they swipe their credit card without even really checking it. And they spent $80 or $100. People, digital nomads I know, will rent a big villa in Bali and they'll just travel constantly, and I always think, even if you have the money to be able to afford to do this, is this the best use of your money? Should you not be saving some of this? So the quote that I have up here that I really like is, it doesn't matter how much money you make, it's how much you keep and how much money that money ends up making you down the road. And that'll be with the investment part. So the type of savings that I really like to follow is the FIRE methodology, which is financial independence, retire early. These people have gotten really popular in the media in the last couple of years, and it's an interesting concept where the point of it is you keep your costs very low. You make your savings rate really high. So instead of saving 5% or 10% of your income, you aim to save 40 to 80% of your income. And with that, not only can you actually have a good savings account for emergencies, like what might be happening in the next couple of months, but also after you fulfill the emergency fund, you can start investing it, which hopefully will allow you to retire early and be able to live off of that. And there's two kind of main steps of it, what people would call lean fire and then fat fire. Lean fire would probably be around $1,500 a month in investment income, whether that's through dividends or through interest earned. And then that'll allow us to live in cheap places like Thailand, here in Sri Lanka, Eastern Europe, lots of places in Southeast Asia, for example. And then fat fire is what people would normally consider over $5,000 a month in kind of this income. Or if you look at point number 3, something called the 4% withdrawal rule, which it actually can get very complicated, but the easiest way to think of it is if you withdraw or cash out 4% of your total net worth every single year, but you're making 5% or more, you're able to probably go 30, 40 plus years and be able to retire from that. I can go into that with a little bit more detail if anyone has any questions. And kind of the last part of it is, as digital nomads, some of us don't have or aren't planning to save up or invest up to $1 million so we can withdraw $40,000 a year to live off of. Some of us just want to get our passive income up to X amount, whether it's 1,000, 1,500, 2,000, whatever it is. So let's actually open this up right now to some questions. It can be about your personal circumstance. It could be about anything I talked about, but let's try to keep it more about the savings part. You can just go ahead and unmute yourself.
Johnny, I have a question, although I'm in the middle of the supermarket right now.
Okay.
So I don't know whether you can hear me. But
no, we can hear you fine.
I was listening. Yeah, great. So I was listening to your YouTube video this morning to kind of understand, what you will talk about, etc. And since I'm not aiming to be a digital nomad, I like traveling, but I don't want to have it as a lifestyle. I would be curious also to hear that angle of the story. What if you decide to stay, I don't know, in Western Europe or something like that, and how can you still apply the principles or maybe other principles that are out there? So I don't know whether this is fitting into your story or not, but I would be curious to hear more on that.
So the principles, are you talking about more the savings or low cost of living or the tax breaks, or what specifically?
Any. Actually, especially saving, because I heard that you were saying like saving 70% of your income. I mean, I try to save like 30% here in Europe, which I think it's already great. But like 70% for me, it sounds like how would I ever do that? Like I need to earn so much more to save that much.
Yeah, that's a great question. And actually, you're not alone, because most of the people in the US or really anywhere in the world, they hear that number 50% or 70%, and they just assume that it's impossible. I mean, most people would think 30% is impossible. So big congratulations on saving that much even. But I guess there's two factors on that. One is the reason why people in this community, the FIRE movement, like getting that savings rate up as high as possible is because it fast tracks, your savings account and your investments and your ability to retire early one day. If you save, the normal amount that most people save, 5% or 10%, may be 40 or 50 years before you have enough to retire. But if you could save 70% of your income, you can maybe do it in 3 years. So how to actually do that? So my talk at the last Nomad Summit in Chiang Mai was all about the different tools that we have to be able to increase our savings rate, especially as a digital nomad. But some of those that would apply to even someone who's living, in Western Europe are things that, you may not want to do for yourself right now, but then instead of, I think the biggest problem with saying these things to most people is in their head, they start checking off like, oh, I can't do that, or my situation is different, or I'm not willing to do that. The people that make it work are the ones that just consider everything. They might say, okay, so one possible way to save money is to get a roommate. And you might think, I really don't want to get a roommate. But instead of just saying to yourself, okay, it's impossible to cut my rent or my mortgage in half because I'm not willing to get a roommate, you can ask yourself, well, what are some other options? And one that a lot of people in the US have been doing is, instead of sharing a flat with someone else and being, having to share the kitchen and the common area, and maybe even the bathroom, which a lot of people aren't willing to do, what a lot of people in the US do is something called either having a duplex or a triplex, where they will usually buy a place, they'll put down the down payment, and they'll have, let's say it's a $4,000 a month mortgage or $3,000 a month mortgage or whatever it is. And they will rent out the other units. So it might be a 2 or 3 unit place, each with its own separate entrance, each with its own, it's almost, basically a separate flat. But if you're willing to be the landlord and either rent out the other one on Airbnb or even to long-term tenants, there's a chance that you can get your own cost of living to half, or some people even get it to zero. So there are always kind of options of trying to figure out, how can I improve my savings rate? Obviously, the easy ones are, cook at home instead of going out to eat, or don't buy things new. And these are things that people in the FIRE community talk about all the time. So you can look it up and kind of just go through it. But my biggest piece of advice is, every time you look at an item, don't automatically assume I can't do that, or I'm not willing to do that. Really consider it a possibility, and then decide if it's something you want to do, or if you want to focus on something else.
Thank you. I think that's great. And I was also wondering to, kind of do a monthly check, like what am I actually spending on what? Because I never did that in my life. And I know that, I think you do that quite rigorously, right? Like, I think you have like a monthly payment. This is my revenue. This is my spending, la, la, la. So you always do that yourself?
Yeah, it's been more than 3.5 years that every month on the first of the month, I sit down and I write out a expense report on my blog. It's johnnyfd.com if anyone wants to look at it. But I will break down exactly how much I spent that month on rent, on utilities, on eating out, groceries, my SIM card. And in the beginning, it was really good just to see it, and because I think there's a quote that says, what gets measured, it was something like, what gets measured changes, or something, where, it applies to many things. Like with fitness, if you're trying to lose weight and you don't do anything different except for you keep track of how often you work out, how many calories you're eating, that in itself will help you lose weight, and it's in a significant way. For finances, just by keeping track of how much you're spending and how much you have left over at the end of the month, that automatically, just subconsciously, helps us cut out unnecessary savings, which expenses, which increases our savings. So I highly recommend every single person, as a bare minimum, go down and and know exactly how much you're spending per month.
Great, thank you.
Yeah, you're welcome. If anyone else has any questions, feel free to unmute yourself and ask it here. All right. If not, we're going to move on to the investing part, which I'm sure a lot of people, probably most of you are looking forward to. With investing, really the point of it is to try to buy your way into passive income, whether it's to be able to retire early or retire sometime in the future. And what I like about investment income is it really is the only true form of passive income. I spent the last 4 years building different streams of what I would like to consider passive income or what I thought was passive income. I wrote a couple books. I sold things on Amazon. I have websites and affiliate offers. I have email autoresponders. I have courses on Udemy. I have my YouTube channel. I have all these things that technically make me money even if I don't add to it. The books I wrote 5 years ago, and they still make me money every month. The courses I filmed 2-3 years ago, and they still make me money every month. But they're not truly passive, because if I never talk about it again, if I never update it again, or if I just let enough time pass, those will eventually dwindle down to close to zero or to zero. But with investing income, some of the biggest stock firms, I think it was Fidelity, they did a study seeing who are the best performers, which customers end up making the most in their portfolios. And they found out it's people who either died or forgot they had an account. And to me, that is a real good sign that it shows investment income, if you don't touch it, you just leave it in there, it can potentially be the best stream of passive income. And it's something that I think the sooner that we get started with, the better off we're going to be. And that's why I'm so excited for it. So before we actually get to the slide, is there any topics in particular you guys want me to cover? If anyone has any personal situations, you can unmute yourself now.
I think just one comment, which is the earlier we can start doing this, the better. But for some, like me, who've maybe left it a bit late and are playing catch up, it's whether there's any strategies to kickstart this when you've left it later than is ideal.
Yeah, that's a good question. And there are definitely ways to do it. You're not going to be left kind of in the dust, but the easy paths of, just putting in a small amount every month and not touching it, and then waking up when you're 60, a millionaire, is no longer going to be an option, because the power of compound interest really starts kicking into overdrive when you've had it invested for 20, 30, 40 years. To play catch up on it, the ways that you would do it is you would really just have to either cut your expenses more and sacrifice, for a few years now, and try to build up that snowball as quickly as possible. And then kind of, say, okay, I spent 5 years, living as cheaply as possible, really giving up a lot of things, but to build up the snowball, now I can start enjoying, my Netflix and lattes and, a more comfortable apartment, all these things. And I have this snowball that's growing itself. So it is a sacrifice to try to cut those expenses when we're comfortable. I know for me, when I was, in my early 20s, I didn't mind living in really basic apartments. But as I get older, I want comfort. I want a nice, big, comfortable place. I want more space. I want to fly premium economy and at least, if not business class. But these are ways that we can sacrifice for just a few years and try to play catch up a bit. The second part is obviously to earn more money. And this can be done by starting a business on the side, or scaling up a business. But really, it is about catch up. It is possible, but it's at the same time, it's one of those things where even if it's not easy, it's necessary for most of us. So it's one of those things. It's good that you're thinking about it now because there are still options.
I had a question. Is there a limit, a down limit, like a bottom limit for investment? Because I'm around 3,000 euros right now, and I'm not quite sure.
Okay. Your mic's a little bit hard to understand, but I think what you're asking is there a minimum to, before you have to start investing? So the good news is nowadays there's so many different platforms online and they make it so you have very, very low minimums. It used to be you'd have to have $10,000 for someone to even want to talk to you because they don't want to fill out the paperwork. But now with a couple of clicks, you can start investing with, $100. But what I would recommend to everyone is before you start investing, have emergency fund. And that amount is normally anywhere between, on the low side, 3 to 6 months of your expenses. On the high side, it can be 1 to 3 years. And it really depends. So if you are like me, you're single, you have no debt, you have no responsibilities, and you're okay with, getting a crappy job if I needed to, or living very cheaply to get through the next recession, or even moving back, with my family, then I can probably get away with 3 months of savings. But if you have a family, you have kids, you have dependents, you have a mortgage, then you definitely want to have a bigger savings fund. So the way to calculate that is pretty simple. You figure out what you spend per month, and this is why it was so important in the first stage, and you multiply by the amount of months you want as a buffer. So I'm spending now about $2,500 a month, and let's say I want a 6-month buffer. That means I only need $15,000 in my emergency fund. And what's in the emergency fund, you want it to be somewhere in a savings account where you have access to liquid. You don't want it in the stock market. You don't want it something that's locked up for a year. You don't want something that's volatile, that's going to go up and down. So for Americans, there's Ally, there's Marcus, these online banks. For Europeans and Australians, I've looked, and there's always going to be some small unknown bank that's either online only, it's a credit union, that will pay some type of interest. So even if it's only 1%, it's still better than nothing. So that's the first stage, is make sure you have X amount of months of emergency fund. Don't touch it. And the main reason we want that is not even so you could pay rent. It's so you don't have to sell your other investments if the market is low. So the next couple of months, we're going to see a lot of people in the US, but around the world, needing to sell their Bitcoin or their stocks or their real estate while the whole market is down, because they don't have any savings, or they only had 1 month of savings. And the problem when you sell things when they're down is if everyone's in a desperate situation, the economy is bad, you're selling it for maybe half of what you bought it for, and you'll never get that money back. So that's why it's so important to have the buffer, the savings. It's not even just so you can feed yourself. It's really so you don't ever have to sell investments when they're down.
Question. Why did you mention online banks specifically for savings?
So in general, the
normal banks,
yeah. So in general, normal banks have a lot of overhead, so they can't afford to pay interest. But the online banks, because they have less staff, they're not paying for real estate, they can offer, up to, right now, I'm getting 1.7% interest.
Hey, Johnny, I got one question.
Yeah.
What is the ideal amount of time or months that should be put away in the emergency fund? How many months of buffer should you have?
So I don't know if you missed it just a few minutes ago, but it really depends on your situation. I was saying that for me, I'm single, I have no dependents, I have no responsibilities, and I'm okay with, getting a job, driving an Uber if I really needed to, or sleeping on my parents', couch if I needed to. So for me, I can get away with 3 to 6 months of savings. If you have a mortgage, you have a family, you have kids, then you might want 1 to 3 years. And the reason why that amount changes is because whenever there's a recession, which we may be coming into now, chances are we're going to come to now, nobody can predict how long it'll last. It might only last a month or two and then things swing back, or it can literally be 3 years or longer. So that's why in general, people recommend 6 months to 3 years worth of savings. So you don't have to sell your investments while they're down. You can live off your savings.
Okay, awesome. Thank you.
Well, you're welcome. Anyone have any questions or anything about your personal situation? I'm happy to answer it.
So you said you have a 7% of interest rate at one of the online banks? Is that
Yeah.
what you said?
1.7. That's with Marcus. It's a U.S. bank.
Okay.
Yeah. But actually, depending on the country you're in, some places do pay up to 7%, but they're usually in currencies that aren't as stable. Where do you live?
In Netherlands.
Yeah. And who was it that raised her hand saying they're paying 7%? You got to unmute yourself.
Valerie in Kenya, I get 7%.
I'll see. Yeah. So if you want to invest your money in local Kenyan currency, 7%. But normally, just as a warning, in general, the higher the interest rate, the less stable the currency or the economy is. Ukraine was paying 20% interest for their hryvnia, and the reason is because nobody trusted the Ukrainian banks, nobody trusted the government, nobody trusted Russia not to come in. But you know what? Like, if I could have opened an account, I probably would have and put a few $1,000s in, just because you would never see a 20% savings account in the US or in Europe.
But in that sense, it's like an investing again. It's not really saving. You're risking a lot.
Yeah, I would say that's definitely a high risk investment. And even in Ukraine, if you put your money in the bank as USD, the rate becomes much lower than if you put it in their local currency. So it's hard to say. I mean, when you want to, for your emergency fund, it's a no-brainer. It's easy for me because I'm from the US, so all my accounts are in dollars. So it just makes it easier for me to keep it in dollars. If you're from another country, that's something you want to consider. Where can I park my money, in what currency, with what bank, where it's going to be safe? Not necessarily, growing them the fastest or the most, but knowing that if I need to access this money, that there's a good chance I'll be able to get it. All right. So, anybody want to know about any investments in particular? Stocks versus index funds, or real estate versus bonds? Feel free to ask any of those questions now.
I don't have a question, but I can say one observation that I kind of have, which it's hard for me to implement. But if you have a Euro and USD account, let's say, just an example, and you're spending in Brazil or in Russia or in Indonesia, then you need to kind of see which one you want to spend. You want to spend euros or US dollars, and the best way to see that is, I mean, you obviously look at the rates, but you don't know what's going to be tomorrow. Is it going to be even worse or better? So you kind of keep your balance in euros and dollars the same, and then if tomorrow one goes up, you spend that one, and it goes the same again, or let's say you keep it at some level that you want to keep it, and then you spend the one that is above the threshold that you set. That's the easiest way to calculate which one you want to spend if you have several currencies in savings.
Yeah, I would say that, at least for now, and things may change, if somebody wants to have money in a stable currency, right now it's still the US dollar, even though our economy isn't the best and maybe we're not the most stable either. But at least as of 2020, everything is so intertwined with the American economy that if we go down, we drag everyone down with us. That might change in the next couple years or 5 or 10 years, the US dollar may no longer be the stable currency. But for now, I would say, for most people, if you're looking to keep your money somewhere stable, you might want to consider having half of your money in a US dollar savings account somewhere.
So not euros, at least. I kind of consider euros or Swiss francs also kind of safe.
Yeah, I mean, they're definitely safer than, the Ukrainian hryvnia or other things going on, but it's hard. And I'm fortunate because it's just convenient for me to keep in dollars. But if I was from another country, it is something I would have to consider and think about. Very cool. So if you guys want to know more about what I actually invest in, I have a blog post that I just put on johnnyft.com. You can click on the photo on the blog. It's how investing in stocks and funds. I recorded a podcast recently with my co-host Sam Marks. We talk, really, it's advice on how to start buying stocks or index funds. And it was prompted because I have a lot of friends who've been asking me, and more about the savings side on the Nomad Summit YouTube channel. I recorded my talk from there, talking more about how to save money and how to invest for the future. So everything's there. If you have any questions, after this call, you can just leave a comment on any of those platforms and I'll answer you. So before we sign off, anyone have any last minute questions?
Well, I don't know about this investing. If you have any idea what is the legal protection, and if some, like I have no US or European citizenship, so no courts are gonna protect me if I have a problem with the broker or with whatever in between me and the final product that I'm investing in.
Yeah, it's complicated. But in general, the best way would be to invest in companies that have their legal residence in a country like the US or in somewhere in the EU where they're not going to want to get sued by that country. One of the most risky investment that I was in is I have a Forex account, managed Forex account, and they're registered in like Belize or something, and they do it for a few reasons, tax reasons, but also liability reasons. But because they're in Belize, there's nothing I can do if they decide to run off with my money. Yeah. And I know that. And that's why it was just a small percentage of my total net worth, 5%. And I knew it was high risk, high reward. It ended up paying off and I ended up making quite a bit of money from it. But I would never trust a company like that, with a significant amount of my money. If you want to invest in like index funds, for example, if you invest, with Vanguard UK or I haven't looked at them, but I'm assuming Interactive Brokers is registered, in some legit company. These kind of bigger companies, they're probably not going to, risk their reputation to try to screw you. And they have so many other, people investing under them. And if they're if they're registered in a country where they can get prosecuted, they're probably not going to run off their money.
So I have an opposite situation. They can be prosecuted, but not by me because I'm not a citizen of that country, and most likely they know that. So they will have incentive not to take care of me that well.
I mean, if
Let's
they're big
they will
enough,
not screw me on purpose, but when Russians had account in Cyprus, the first one who got in 2012, it was the Russians because it was so easy to, nobody could do anything out of that.
Yeah, that is unfortunate. So you might want to look a little bit deeper. This is outside of my scope, but in general, if the company has a lot to lose, they're not going to, risk screwing you for no reason, just to try to make some money.
Yeah, of course. I'm more worried about the Cyprus scenario when something goes down, and obviously the first ones who get fucked up are the ones who are not the citizens or not easy accessible to the legal system of the country, which will be me, right?
Yeah, and that's actually a good point that you bring up, because a lot of times we as nomads or location dependent entrepreneurs will register our company in places to avoid taxes.
Yeah.
But with that, we also lose a lot of the legal benefits. So for example, all the big cruise lines, Royal Caribbean and Carnival Cruises, they're all going to go bankrupt. But even though they're American companies, they had chose to register in the Caribbeans to avoid tax. So when it comes time for the bailouts, the U.S. government's going to bail out the airlines, but they're not going to bail out the cruise ships, because the cruise ships haven't been paying tax. So they say, you know what, you're not even an American company, screw you.
Yeah, good point. Yeah.
Yeah. So that's probably another good point, is this is why I don't buy individual stocks, even though while it's down, is because as a shareholder, you're the first to get screwed. If the government bails out American Airlines, they will probably structure a deal where they go bankrupt first. So they get rid of all their debt, they get rid of all the shareholders, you get nothing. But then they rebuild and they reformulate.
Mm-hmm.
So the company will survive, but us as the shareholders who thought we were buying it very cheap end up with nothing.
Yeah.
So
good point. Yeah.
This is why I'm such a big fan of index funds. They're very boring. But they're still probably the best investment out there in terms of the balance between, having a good enough growth, where they normally grow between 7 and 10% on average, even though there's ups and downs, but also they'll most likely survive because, for example, in one of the funds, the total U.S. stock market has 3,500 of the largest U.S. companies. So the chance of all of them failing, or even a majority of them failing, is very low. All right. So that's really it today. I mean, I'm sure some people were waiting for
one question, if
Yeah.
you can share.
Yeah, please.
What is if you are like buying index funds from your savings account, what is the percentage? Let's say you buy it at one price, you sell it at the exact same price. How much you lose overall? If you can share that to the brokers, to the whatever taxes, to I don't know what else in the picture.
So it depends completely on the broker you're using. Some brokers will charge a $8 fee. Some have a kind of preload where they charge.
Sorry, but I'm asking for you if you can tell me yours, so I can estimate if somebody offers me something.
Yeah. So
what is I guess you get a good deal because you know so much about it.
Yeah. Well, when I first started, the best deal there was you paid $8 a trade. Now, pretty much every company is $0. It's basically free to buy and sell, whether using Charles Schwab or Vanguard directly. Now everything's basically free. The part that you're getting charged money now is the fund itself has a annual fee. The reason why I like Vanguard index funds is that fee is extremely low. A typical mutual fund might charge 1% fees, or you might, if you have some kind of financial manager, they might charge you 2% fees. And even though that doesn't sound like a lot to some people, it ends up adding up to an insane amount of money. It can literally end up being $500,000 if you're paying 1 or 2%, throughout your life. With Vanguard, the fees are 0.004, which is, basically $40 on a $100,000 investment per year. So it's almost nothing. That's why I'm such a big fan of these companies.
So really, from your, let's say, so you buy $1,000 stocks today. In 1 year, it's the same price you want to sell it. You get $1,000 minus 0.04%.
Yeah. So basically you end up paying, in that scenario, you pay them $4. And if it grows, let's say it grows, let's say doubles, right? Which is it's probably not going to double in a year, but
yeah, let's say doubles. Yeah.
let's say in 7 years it doubles.
Mm-hmm.
And it's different for every country. In the US, they very discourage people from trading. They want to encourage you and give you a tax break if you're investing. So the difference, at least in the US, is how long you hold it. If you have it for less than a year, they will charge you normal income tax, which is 35 to 50%. If you keep it for a year or longer, they charge you a different tax bracket. That's only 15%. And that's why it's always a good idea to hold long term, because for example, right now I just bought a bunch of stocks during the dip, and if I wanted to, I could sell it right away and make that profit. But by the time you take out the taxes, the profit's not as big as I would like it to be. So that's why I'm always thinking, if I'm going to buy something, I have to hold it for a year or longer.
Cool. Good to know that.
Yep.
But that's again US taxes, which are not applicable to me, but okay, I understand the concept.
Yeah. And I think, everyone's situations may be a bit different depending where you're from, but at least these are things to look into and say, okay, well, I know in the US it's 1 year and 15%, what is it in my country? So these are things that once you know what to ask for, it's pretty easy to find out.
Cool.
All right. Cool, guys. So it's been fun. I didn't have anything to pitch or sell anything. I just really had free time, and I figured this might be fun to try out. So if you have any questions, just find me on any of these places, leave a comment, and hopefully I'll see you guys somewhere in the world. Stay safe.
Thank you. Bye.
Thanks, buddy.
Take care now. Bye.
Welcome,
Bye
guys.
bye.
Thank you.